Hey, Upper Trades! I wanted to do a video analysis update, really, just of one stock. And interestingly, this is usually the most important stock in the market because for a very long time, it had been the top holding of the Nasdaq as well as the S&P 500, and really a lot of basically every equity, American equity ETF, Apple Corporation, even in non-tech ETFs, has had a very large allocation historically. And what we saw for an entire quarter was very bizarre. The Nasdaq exploded, Microsoft exploded, Nvidia exploded, Amazon exploded, Facebook went to Mars, made me look kind of dumb, but I still owned FBY. And for a lot of these, NVDY was a large position that I took in June, a big position I took in June of 2023, and that is still paying me crazy dividend yields. It actually just paid me a 100% forward yield just for 1 month. And basically, that NVIDIA position has already paid for itself in the form of dividends, not even with me realizing gains. So there's been a Microsoft, Nvidia, Amazon, Meta, Broadcom. Really, as far as just looking at all of these go, Google, Tesla, and Apple have really underperformed. But Tesla, it's really more of a auto stock. We see lots of setups in the EV and the solar stocks, and it could also be a catch-up play with AI. Google, perhaps more of a communications play, but really Apple almost always is moving step for step with the Nasdaq 100. It's like death, taxes, and Apple's gonna be moving step for step with the Nasdaq, except for this quarter. Pretty wild to see. And so this is also a really interesting way for me to display one of my favorite technical setups. Now remember, a technical setup is another way of saying bullshit. Right? A technical setup is another way of saying bullshit. And I'm actually much more interested in Apple for a few reasons. A big one is that I can blend underlying commons of Apple. I could even use put options on an inverse ETF on Apple and probably save some money on Theta, get more exposure, but those are pretty illiquid right now. But the real reason is I can blend the underlying holdings of Apple commons with not one, but two ETFs, one from Yield Max and another from Curve, this new company. They're a little less liquid than the Yield Max, but the Curve ETFs, they also have one that runs out of the money synthetic covered calls on Apple. So Apple, assuming that Curve ETF is liquid, is one of these stocks. Oh, and by the way, I completely smoked this just in case, in case you think that I'm one of these people coming out and trying to. I hate to say it, man, but the StockTwits representative official page, they said new all-time highs for Nvidia are not bearish bears. And as soon as they posted that, like Nvidia went down like 5%. I was like, never ever say something that stupid a week before quad witching, especially the March one. Anyway, this is an opportunity to, some TAs, technical analysts, have something called a holy grail setup. Trader Stewie is probably the biggest FinTwit account that has a holy grail setup. He has something called the power earnings gap, where basically the stock has, like probably what Square Cash had recently, a big power earnings gap. It goes sideways and it consolidates, and then once it retests the 20 period moving average, that's the holy grail. Well, this calling anything a holy grail is very stupid. So I'm going to try not to do that, but I do have my own little version of a holy grail, if that is even appropriate to say. So let's just look at what I'm talking about, and let's just talk about quad witching maybe for a little bit. We'll notice that the Nasdaq has reached the length of this rally placed at this low. So an Elliott wave, whenever that happens, regardless of the labeling, that's an important thing to know. When there's a clear advance, a clear ABC correction, and a clear advance, no matter what the labeling is. The length of wave 3 places the wave 4 low being where wave 5 ends. The length of wave 1 places the wave 2 low being where wave 3 ends. Wave theorists always, especially if people are getting haughty, HAUGHTY, not the other kind of haughty, then especially before quad witching, wave theorists like me, we kind of raise our eyebrows. Now, another interesting thing happened today, besides what Gurus posted. It was that while the Nasdaq and really a lot of the indices were blood red, a lot of the indices, and this is just in a world with JEPQ and FEPI, how could this be invalidated that I'm looking for this consolidation triangle for what would be referred to, and this is maybe getting a little, this could be invalidated, but this is really just to spoil the video. This is a bull video about Apple. So the market rotates in mysterious ways, and how could the Nasdaq invalidate that I'm looking for sideways consolidation? Well, it's going to be this relative strength index on the weekly. For the Nasdaq futures, the high was made at 76.35, and for this wave 3 impulse, then we had a wave 4 correction. Now there's a chance wave 5 is ending at the length of wave 3, placed at the wave 4 low, and it's making momentum divergence on the RSI. So the very first thing that the Nasdaq is going to have to do to invalidate that I'm looking for some chop, which realistically would just be how I describe it. Definitely, people are going to be dramatic, and honestly, they could be right. They could be right that this isn't chop. I think that this is the proper wave count, and I could be completely wrong. But what I'm really trying to say is, and this is a little too specific, if the Nasdaq does digest some of these gains, I think there might be my version of a holy grail to illustrate in Apple. Oh boy, what's that mean? Well, if we just look, whenever two top holdings, I'll just write it out. Puppies, holy grail. Whenever two top holdings or highly correlated assets through, that's embarrassing. And my favorite way to measure correlation is just ETFs. Are they the top holdings of the same ETFs? Then they're going to move together. That's just generally, there's other ways to define correlation, and statistical correlation, macro axis will give, but realistically, that's my favorite way to do it. Whenever two top holdings or highly correlated assets participate through ETFs, participate in the same ABC correction with the same high, and one explodes past it, the other is a candidate to follow. Very simple, kind of basic, but I think Apple is just kind of it was bright green today when all those other big tech stocks that have run off without it kind of made people forget potentially that it's made people forget even that Apple's in the market. It was bright green today, and Apple does have a little bit of a connection to China, and I'm not going to get too far into that, but I've noticed, I've talked about KWEB, and I've also talked about how a lot of these Asian equity ETFs, right there at that 315 expiration and that 419 expiration, and really all through July, institutions are taking very large options positions in Chinese and Asian equities ETFs, specifically in tech. And anyway, so if we look at this, there's a chance that the Nasdaq is going to digest some of these gains. Now, if it just keeps running to the moon and it breaks a new high on the RSI, then the wave 3 target is going to be up at 19,892. That's going to be the first one. And then the wave, it's not even on the chart, is it? It's way up there. You can kind of see it. 21,000, 22,000. If things really got crazy, if the Nasdaq turned around and broke 76.35, this wave 3 could extend up to 19,892 to 21,400-ish. But if it doesn't, what I'm looking for is that the Nasdaq, just the Nasdaq, is going to need to digest some of these gains. And very interestingly, as it's doing that, look at this same December high. Let's just call it the December high, late December, Christmas actually, but it doesn't have to be the exact same date. Apple, the Nasdaq has exploded beyond it. So this is my untouched chart of Apple. It's a little messy. I just wanted to prove I don't just. Some people are just really used to, gurus just talking about the market once when it's trendy and starting a Discord and never hearing about that stock again. So I did have Apple ending an ABC correction here as well as here, and new highs being made. So we'll get to the count, but what I really just want to focus on, this December high, let's just call it the December high, mid-December high. The Nasdaq and the Apple roughly form a very similar one. It's interesting that Apple kind of led the Nasdaq down, but we notice that the Nasdaq has gone and exploded beyond this 1211 high. And from an Elliott wave perspective, with quad witching right around the corner, institutions buying strangles on Apple, seeing that, I think we'll still see Apple on the strangle screener. They could be getting ready for this quad witching rotation somehow, magically, right around the second quarter. It looks like Apple's not on the end of day screener. I did see it on the 172.5 strike and the 167.5 strike. That screen for bar chart, that free screen, only shows the next 60 days. But just looking at Apple, within the cycle from this low, there's a few ways to count it out. But really, I'll get into what's important is this ABC correction and defining the levels. And that should wrap it up. So Apple ending wave 2, a small wave 2 was forecasted. Apple ending wave 3 and making a new high, ending a wave 4 correction and making a new high was forecasted. And most of those big tech rallies, AMD and Nvidia and the Nasdaq itself, I smoked pretty thoroughly. Microsoft, I always smoke Microsoft, but I'm sure a lot of people do. So there's a few ways to look at this count of Apple. And it's really hard to think about Apple being in an early cycle on any time frame. But one way to look at it is that this is a 5 waves impulse. And it's kind of hard to argue with that this is 1, 2, 3, 4, 5 waves up. And this is kind of fits the definition of a dramatic 3 swings. It's an ABC. So wave personality, distinguishing between wave 2 and wave 4, the general rule of thumb, wave 4, more of a descending, slanting down triangle, usually. Very known for being a high and tight bull flag is a very common wave 4. Just kind of a 38.6% retracement. Looking at this, though, this is a pretty dramatic, just visually, it fits the description of a wave 2. I can't tell my broker that visually something fits the description of the wave 2, but I am very much planning, based on this analysis, that I'm going to take some form of long position in Apple And that even the fact that I could be interested in longing Apple and then selling options on the Nasdaq through JEPQ and QQQY, it almost opens up a pair trade that could have huge income. And those types of opportunities were not available to non-institutional investors, which is what I am. Until recent years, Yield Max really started, and JP Morgan really started the arms race, and it's been the most profitable thing to ever happen to retail, in my opinion, especially this retailer. I saw one guy on StockTwits, they're going to get $45,000 from their monthly ETFs doing this. Holy crap. His name, or their name, was Terra Slayer. There's no this kind of infinite drip. And even with these curve ETFs now, two paychecks a week from Apple, 2 paychecks a week from Amazon. Oh man. Amazon, and really they're obviously mostly bullish positions, but selling out of the money options is going to lower the delta. And then now there's even leveraged ETFs on single stocks like Apple and Nvidia. So that's really the type of analysis that's going to open up. Looking at this high, though, there's still probably a little use for Elliott Wave and some voodoo. With quad witching around the corner, we'll get these levels tight. But the skinny of it is that, oh man, this is great. This is great. 196. The market rotates in mysterious ways. I can't believe this is just wild that I'm about to smoke this just realistically. Holy gosh, I'm good at this. There's no way I'm going to smoke this. Yep, I'm going to smoke this ABC correction. So this isn't, some people would call this a little bit of a pair trade. I'm not. I'm prepared with straddles and strangles on the Metaverse ETF, which is something that I went to in my most recent video about Nvidia pretty thoroughly. I have the 12 strike straddle, the 12 strike put for August on the Metaverse ETF METV, and I have that paired with the 13 strike call. So that's called a strangle, and that is how I'm prepared for the stock market crashing. That is how I'm prepared for a bloodbath. And just going back to the Nasdaq, I don't expect a bloodbath at all. But I am looking for, that might have been a little too grandiose to say before the March quad witching. A bloodbath in FinTwit terms is probably what I should say, where we're just going to start seeing this, right? The bloodbath in FinTwit terms, the ABC expanded flat, they just keep calling this expanded flats. And then here's the consequence of calling that an expanded flat, just so y'all know, it's Nvidia. That's what happens. That's what happens when you just call something an expanded flat forever. It's like, I can't technically disprove you, but your broker and realistically, your Discord subscribers are not gonna like that. But I am prepared for the Nasdaq to chop. JEPQ, JEPQ, FEPI, and QQQY are ETFs that I'm interested in collecting that premium with. And another one, TDVI, a little different sector. That is First Trust version of JEPQ, but for the technology dividend underlying. An interesting performance with that, and also a little more fundamental backing with technology dividend stocks. Anyway, calling tops on the Nasdaq and looking for corrections, I'm not interested in doing that, and that wouldn't really be an accurate representation of how how I'm positioning my portfolio. I've got straddles and strangles on the Metaverse ETF. So my expectation is that yes, we're gonna have some red at some point in the second quarter, and the Nasdaq is going to need to digest these gains. That will be invalidated the moment that the weekly RSI goes above 76.35, and I went over what the extension level targets could be. So that's why JEPQ collecting those premiums in case it and FEPI collecting those call premiums, those covered call premiums with their partially covered bucket, is going to be capitalizing on these bloated call premiums, which is exactly what we've seen from NVDY and AMDY and FBY and MSFO. That the covered call premiums get very high, and then they're only covering a partial amount of the position, or they're selling out of the money synthetics. And even if they aren't, they can just be blended with the underlying that's uncovered, and then the premiums are real huge. And I'm still collecting 100% forward dividends from NVIDIA, even though realistically, if I was holding only commons, I probably would have needed to take profit at 750, 700 just to sleep. But because I had a synthetic out of the money covered call bucket, that wasn't really necessary at all. And even though NVIDIA never pulled back, I still collected huge premiums. So I'm more interested in JEPQ, FEPI. I'm going to research TDVI and QQQY for playing this specifically. And I have strangles on the Metaverse ETF so that if a correction does happen, I can buy against the in the money puts. And remember, a strangle also has a call leg. So we do see this extension up into the lower 20K range just right off the bat. That can happen. I think that a little quad witching wave 4, whenever wave 3 places the wave 4 low, reaches that wave 5 target, I've seen it too many times. People can get haughty and sell discords for a couple weeks after that, but it doesn't stick. Let's just look at these exact levels for Apple, though, because what I'm more interested in is that while I'm collecting premiums from the Nasdaq, I think that Apple is actually going to outperform the Nasdaq. So I don't necessarily do pair trades, but that kind of would be a pair trade analysis. I don't do long shorts in my portfolio, but now that ETFs have the ability to sell options, there's very cool, really infinite combinations, especially also with single stock leveraged ETFs. I mean, now used to a call derivative position on Apple would have cost an extremely high amount of money. It's a lot less liquid, but on an inverse ETF of Apple and the more popular ones like the NVIDIA and the Coinbase leveraged ETFs, those have gotten pretty liquid rather quickly. And even for SQY and NVIDIA and CONY, those covered call ETFs from YieldMax, those options markets are even getting liquid. So Apple's inverse ETF, -1 ETF, is not the most liquid instrument. But if it were, I think that there's even the possibility of puts on an inverse leverage ETF of Apple and then blending it with out of the money synthetic covered calls. And there's 2 ETFs collecting those, plus the option is going to give more exposure from a delta standpoint. And because the inverse leverage ETF of Apple, which I think is around $25 or $30, and I think that the ticker is AAPD. Anyway, I think that there'd be money saved on the premiums, is all I was saying, because that ETF, a put on that ETF, just because it's $20 or $30, is going to cost a lot less than a call on Apple itself, simply because this is $170, and the ETF, the underlying ETF for the inverse ETF, a put on that is going to be cheaper, but have roughly the same delta. And the only thing right now that's being sacrificed is liquidity. And so a lot more time could be bought and a lot more for a lot less money. Anyway, Apple itself, I'm interested in it, and I think the MMs are interested in it being a quad witching candidate for rotation. They might use this China connection that Apple has. I could definitely see that playing out. 199.62. And then 180.17. And 196.38. So Quad witching's around the corner. I think that Apple, in the market's magical rotation, is somehow going to benefit. If I had to guess, the fundamental reason that Apple is able to weather storms, should I be right and this not go below 164 and invalidate the projection, should I be correct, and a little, would there be a wider level? That's a short wave too. The 50% fib, let's just see. Yeah, the 50% fib is 162. I think that's a good level. I'll call that the invalidation zone. 199.62, 124.17. So yeah, this is the invalidation zone, 161.90. The wide is 161.90 because it's the 50% retracement, and I'm calling this a short wave too. And the tight is 164.91. I think the just right level would be 164 flat. That 161.8% extension of the length of wave A, place of the wave B low. Let's see. A little bold with the rotation call, but it's quad witching, and so I'm always looking for some magic to happen. I think Apple something about a bite being taken out of it in a reference to all of its dreams coming true. I don't know. I think this is a 1, 2, 3, 4, 5 waves impulse wave 1, an ABC correction wave 2, above 161.90, 164.91. I'm looking for in the coming quarters that Apple is going to play catch up to the Nasdaq, and that somehow, some way, we're going to see this little old guy come back to life right around the time the quarter changes.